I categorically believe that we should not be pricing the new system in the fiat system. And anything that does that on top of you're reinforcing I'm trading Bitcoin for a piece of paper to price the world. Yeah, so anything that's doing that is reinforcing a centralization of a function against a kind of US dollar backed system, which would centralize Bitcoin in time. We already have all of the technology to take this to, in the protocol stack, to take this to 8 billion people right now.
Bitcoin has had a big jump, reaching its highest price in 3 weeks and causing growth in the cryptocurrency business and related stocks. The cryptocurrency rose 5.6% to $61,100 before falling to around $61,000, affecting the entire cryptocurrency market. This rising trend illustrates the growing interest in Bitcoin, but financial analyst Jeff Booth believes its potential can only be realized by removing it from the monetary system. Jeff Booth insists that pricing Bitcoin in fiat increases centralization by reinforcing reliance on traditional currencies, which are controlled by centralized institutions. This approach emphasizes short-term gains rather than Bitcoin's long-term potential as a decentralized asset. By tying its value to fiat systems, centralization is strengthened. Shifting towards valuing Bitcoin independently could promote true decentralization and financial independence, especially during price rallies. Booth further pointed out that Bitcoin must establish itself as a store of value before becoming a true trade medium. Watch clips from the interview to gain further insights into Jeff Booth's discussion. Please like, subscribe to our channel, and turn on post notifications for more exclusive content. Enjoy the video.
I categorically believe that we should not be pricing the new system in the fiat system. And anything that does that on top of you're reinforcing I'm trading Bitcoin for a piece of paper to price the world. Yeah, so anything that's doing that is reinforcing a centralization of a function against a kind of US dollar backed system, which would centralize Bitcoin in time. So I categorically believe that if Bitcoin is not a medium of exchange, it is not a sufficient store of value. We already have all of the technology to take this to, in the protocol stack, to take this to 8 billion people right now. It's a mental game, and it's a mental game because most people think prices should go up in the world, and they are reinforcing a system where prices go up. And the only reason prices go up is because money is manipulated. So if you're doing that in Bitcoin, then you were part of the thing that's driving the centralization. And if you're doing that, then what will happen on top of Bitcoin is it will get centralized at layer 2. And you'll be working in a fiat instrument on top of Bitcoin, thinking it's going up, and it'll limit the potential of Bitcoin, because all that would happen is, because remember, these systems are totally incongruent together. In one system, the free market system, prices fall to the marginal cost of production. So we've talked about this extensively. So in the free market, because we use things that give us more value, prices fall, deflation. That is the world you should live in, and the only way so prices don't rise naturally. They rise unnaturally because the money is being manipulated. So if you're pricing from Bitcoin, you'll see all other things are falling, exactly like I said. If you're taking Bitcoin into your piece of paper to be able to price everything, then it looks like prices are still rising. And I would venture to say most people, even in Bitcoin, don't quite get what we just talked about there. And so these systems are completely opposites. They cannot coexist together. One system needs to make prices rise. One system allows prices to fall through the free market. So as a derivative of that, then the system that makes prices rise has to concentrate and steal more from you over time. So if you're and it has to convince you to stay in it. And over time, as that so it's a centralizing force, right? And that centralizing force is a bigger government force, and all of these things that are consequences of not allowing a free market, prices to fall, are consequences that get worse. So if you're inside that system, then that system it either blows up completely and fails, or it attacks Bitcoin from layer 2. What would an attack look like from layer 2? It would look like first concentrated in ETFs and other things in derivatives. And because most of the people in the world have seen wealth, not real wealth accumulating, but the wealth coming from extraction accumulating, from financialization of assets, they would look to financialize Bitcoin too. And you would see Bitcoin as a store of value that you could financialize and play games and derivative games on top of. That is a centralizing force. It has to be, because it's not the free market. But we can expect, if you're pricing from Bitcoin going up, most people would get caught into that because they would think they're winning, because they would be winning relative to other people that don't hold Bitcoin. Well, they're still losing and contributing to that.
Jeff Booth emphasized telling the truth about Bitcoin's potential to raise awareness. Initially, individuals regarded Bitcoin as a store of value to protect purchasing power, just like Argentinians saw the US dollars. However, Booth pointed out that Bitcoin is a greater store of value. As people look further, they realize Bitcoin has far-reaching consequences and the potential to transform the economy. Jeff Booth emphasized Bitcoin's paradigm change from an extractive economy to a decentralized system that serves 8 billion people. He also noted that Bitcoin solves problems that are insurmountable in centralized systems. According to him, history demonstrates that centralization leads to insecurity and control, with money transcending rules. As Bitcoin's decentralized security prevents exploitation, Booth sets a high bar for Bitcoin, admitting that while educated people have long recognized the hazards of centralization, Bitcoin provides a unique answer. Let's go back to the interview and watch more clips to gain insights from Jeff Booth.
So what you're doing right now, what I'm doing right now, is just telling people the truth. And that starts to spread and more people understand. It's the same thing that when you first saw Bitcoin and you saw it as a store of value to protect yourself from this, but you might not have seen it become a currency because it didn't matter to you as much. Your key use case from it was to protect your purchasing power. And then and by the way, the key use case for US dollar in Argentina is to protect you purchasing power. So it's understandable that a whole bunch of people in Argentina would see US dollar protecting their purchasing power relative to the Argentina peso. Now relative to US dollar, Bitcoin is a better store of value. And so each person inside of this thing is making their initial determination of what Bitcoin is. And what you just described as number go up might be one of the first things they see while reinforcing the existing system. And then through more and more time and understanding what this really is and how this is a paradigm change that we've never seen in the world, that there is no one alive today, no one alive ever that has ever seen a protocol that could create the future where we're 8 billion people in service of 8 billion people. We've always lived in an extractive economy, so that's how our minds are wired. We think it has to look like that, whereas this imposes a new discipline. So I would just say that's a hard thing for people to understand, and they start to see Bitcoin through the thing that helps them. And then as they go deeper and deeper and deeper, they start to see how it touches everything and it helps everyone. Bitcoin is like this prism. You could find it through any different way. You could find it through an insight of it solves one of your problems. And then you start to ask yourself, okay, what problem do I care about that could be solved by manipulating pieces of paper? and you find there's no problem that could be solved. And so as this centralizes further and it gets worse, then it actually powers the innovation to be able to solve that problem, because that's what we do as humans. We've never in 5,000 years of human history seen a protocol like Bitcoin. And all money was always captured. It was always centralized. So gold was captured, centralized. We go to war to reset gold or steal somebody else's gold or reprice it because it's centralized. It means it's also insecure as a protocol of money. And so all of the actions for all of our entire existence have tended towards centralization. And if you could control currency, you control your population. There is no law that can protect from you, because the law is just a piece of paper that gets overwritten by the centralized force that controls the money. So that's the way. So laws are money is superordinate to laws, and it always has been that way. So centralization or lack of centralization and security, the lack of that in money, or a lack of decentralization, security in money, has always led to these throughout time. It's always looked like this. We're used to looking through that. So if that's true, then that is a very extraordinarily high bar on Bitcoin, because you have to assume there were smart people throughout history too that knew of this risk. Right? You look through history, you see a whole bunch of people talking about Austrian economics. You see people talking about the kind of going back to religions about the love of money and the risk. So we always knew about this problem, but we could never resolve the conflict. That's the bar I put on the centralization or decentralization risk of Bitcoin.
According to Jeff Booth, Bitcoin's present popularity as a wealth storage is due to its perceived value as digital gold. However, he believes that this strategy limits Bitcoin's potential. Booth emphasized that free market systems naturally lower prices, whereas fiat regimes artificially inflate prices. Interestingly, Booth's remarks come while the Bitcoin market is witnessing a major boost. Bitcoin's price has reportedly risen, followed by Ethereum's 4.2% increase to $2,380, with other altcoins outperforming larger tokens. This timely recovery comes ahead of the Federal Reserve's highly anticipated interest rate announcement, in which market analysts predict a rate decrease for the first time in 4 years, owing to controlled inflation and a cooling labor market. A rate cut is expected to have far-reaching consequences for the economy and financial markets. Lower interest rates often benefit cryptocurrencies, while traditional savings and investment vehicles become less appealing due to lower borrowing costs. Investors frequently turn to risky assets, such as cryptocurrency, for bigger returns. This shift in investor mood may contribute to increasing demand and thus higher prices for digital assets. Crypto-related stocks have also benefited from Bitcoin's surge. MicroStrategy grew 0.6%, Coinbase Global 3%, and Galaxy Digital 5.4%. Riot Platforms, Mara Holdings, Hive Digital Technologies, BitDigital, Hut8, and CleanSpark were among the crypto mining stocks that rose sharply. The broader stock market witnessed purchasing pressure ahead of the Federal Reserve's announcement, adding to the excitement about anticipated rate cuts and increasing investment in digital assets. As investors await the Fed's decision, the cryptocurrency market remains optimistic, with many expecting more rises in the coming weeks. As we conclude, can Bitcoin's decentralized security and scalability features overcome the technical obstacles to achieving widespread adoption as a medium of exchange? Please drop your thoughts in the comments below, share this video, and hit your thumbs on the like button. Thanks for watching. Don't forget to subscribe.